Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over ratios, take a look to see how they are moving against each other. Again, it's an asset priced against an asset compared to history. And then we see if it's expensive or cheap and how it is moving against each other, the two assets. So generally speaking, you want to buy an asset that is cheap and is moving favorably against other assets. You can have many different types of ratios. You could do gold to housing. You can do stocks to gold ratio, all these different things. And these ratios also tell us about the market conditions that we're in. So if precious metals is outperforming stocks, we are in a commodity bull market. We're in an environment that's generally got a rising or increasing interest rate environment. And they all kind of align together to create a picture. And that's what we're going to be looking at. We're going to be looking at all these different ratios. So let's dive in, let's take a look, and I'll give you my financial opinions about these ratios and what they look like. So platinum to gold ratio. And again, they don't move incredibly fast. Sometimes they do, sometimes they don't. Platinum to gold ratio, it is favorable for platinum. It is very cheap. This is actually an anomaly in history where platinum's been this cheap to gold for this long. In history, platinum has dipped down below, 0.7, 0.5 ratio. We're at 0.54 right now, which is incredibly cheap for platinum. We've broken a falling wedge to the upside. We've been tracking sideways, and I do think that this will move higher where platinum will outperform gold. Platinum outperforms gold in inflationary environments. Platinum versus palladium. Again, we're at an anomaly, very cheap level. Last bull market for platinum, it was at a level it started and bottomed at zero point 0.6. That's what this little guy is here. Right now, we're at 0.71. We're still at a very cheap level. It bottomed at 0.32, and we're starting to move on higher where platinum should outperform palladium and grind on higher. Platinum versus silver. A lot of people say that silver is the cheapest asset in the world. It's actually platinum. Platinum is very cheap against silver. So platinum is the cheapest asset against all of the other metals. It's the cheapest precious metal. We are at 45, which means 1 ounce of platinum can buy only 45 ounces of silver. We've seen previous bottoms at 60, 39, 33, and we're at 45, which is very cheap. So this ratio has reached to an extreme of about 148. 1 ounce platinum can buy 148 ounces of silver. So platinum is cheap to silver. It's broken out of its downtrend line here and out of its pattern and is ready to hopefully mess crap up where platinum outperforms all the other metals. Fingers crossed. Gold to silver ratio. We're very cheap for silver. We're at 83. And we've been hanging out here. We hit an extreme of 113 at the bottom of 2020 with the fear kind of hitting max fear. And then we've been working our way down in this ratio with a bunch of retests for breakouts. I do think eventually that silver will outperform gold for a period of time in a commodity bull market. Palladium versus silver. We generally see these large kind of boom bust cycles for palladium against silver. At these peaks, silver is where you want to be. At the bottom here, this is where you want to be to buy palladium. We are heading lower in this ratio, indicating that silver should outperform palladium. Dow to gold ratio. We've seen massive boom bust cycles in this ratio. The Federal Reserve came into power at 1913, which is basically right here. And then ever since then, we've had massive boom bust cycles. it's just been massive boom bust cycles. So what I think is going to happen here is that gold's going to outperform the Dow Jones Industrial Average. It has been since the 90s, 99s, 99, 2000s here. massive outperformance of gold. We've got the cycle had a little bit of a move higher here where we went into a disinflation, we'll call it low inflation, low interest rate cycle. And then I think the inflation is going to come back and the interest rates will go up. And it'll push this lower where gold will outperform the Dow Jones. Here's gold divided by the Dow Jones just to show you a different view of it. Generally, what happens is you get these big spikes. That was the 1970s, all the way to the peak. And then we went into a large decline. This decline is tied to interest rates and how money rotates around. And we have a double bottom here. So this is a double bottom right here. It is still putting in that second bottom here, and we've broken the downtrend line. And now I think we're going to work our way up where gold is going to outperform the Dow Jones Industrial Average. I think that we're going to go into an inflationary environment with increasing interest rates. And I think that gold will outperform the Dow Jones in a dramatic fashion that we haven't seen since basically the 70s. It's going to take time, though. It's not going to be overnight. Gold versus crude oil. Generally speaking, when you're around 30, that is a very opportune time to be looking at crude oil. Anything around 30 or above 30 is a very good opportunity. This is an anomaly up here. We're back around 27.6, guys. Very cheap for crude oil against gold. I do think that this is going to work its way lower at some point and possibly hit a ratio below 10 during a blow-off peak. Crude oil versus natural gas. Natural gas at a peak of 39.4. It's starting to head lower. We're down to 28.56, and hopefully that will continue to the downside. These are anomalies where you should be looking at anything above that line. It is very cheap for natural gas. What does this mean? When these ratios get to these extreme levels, it means that consumers, customers, however you want to call them, will prefer to burn natural gas over coal, burn natural gas over crude oil. They'll prefer to burn wherever they can burn it based off this ratio, meaning that they get cheaper energy on a dollar cost per BTU than other energy sources. Natural gas is also one of the cleanest energy sources. So they prefer to burn it. Customers will choose to burn natural gas over other types of fuel. And that's what these ratios are telling us. When something gets out of whack and it's very cheap, customers or consumers will switch to use those metals or assets or whatever it is, commodities that we are charting here. And it'll move to whatever's cheapest. Here's crude oil versus gold. If we flipped it around, this is a crude oil, we'll call it bull market, bear market, and we've just broken out of this falling wedge into a new bull market with a retest. So I do think that's going to work its way higher in a gigantic bull market for crude oil to outperform gold. Here's crude oil versus the Dow Jones. We are at an incredibly cheap level. Anything down here is incredibly cheap. Last bull market, it went from 98 all the way up and hit its somewhat of an expensive move to 2008. If we had more data and we looked at the 70s, it would have been way higher. This is in the 80s here. We might even go back to that level up there, which from this level, the outperformance, let's get a little thing here, price range. The outperformance of where we are today to that level is 1,167 of crude outperforming the Dow Jones. Now, that doesn't mean it goes up that amount. It means that crude oil goes up and Dow Jones goes down, and that is the relative performance between the two assets. And I expect crude oil to do very well against the Dow Jones Industrial Average. Here's Dow Jones divided by crude oil to look at it from a different perspective. These circles are anomalies in history where you'd want to look at it. This is 98. This is 2020. You can see that we pulled down went to this circle as a retest and then went all the way down, pulled to a very low level in the 2009 area. We are pulling down where crude oil is outperforming. We're doing a retest right now, and we'll probably pull back down again at some point where crude oil will outperform the Dow Jones. Dow Jones versus natural gas. Again, it looks like we are getting larger highs and lower lows in a fashion we are kind of almost getting out of control here. But I do expect natural gas to outperform Dow Jones and come back down eventually when the glut gets worked off and the prices will go up. Coming on down, we've got the gold to TLT, gold to bond ratio. Gold's just outperformed bonds continually, even since the early 2000s. Natural gas versus Dow Jones. This is an interesting chart. Nat gas underperformed. It outperformed here from 2000 all the way till 2008, that commodity bull market. We've got a breakout of this downtrend line, and we are at a retest level. It's actually at a very good time to be looking at natural gas, as it is very cheap against Dow Jones, has broken its downtrend, and looks very good for an outperformance over the long term. This is the copper to gold ratio. Copper to gold ratio has been declining, and that is usually an indication that we've got the economy, which is represented by copper, versus fear in the market, which is represented by gold. When this ratio declines, it means that we could see a recession, a slowdown in the market, given that the fear is outperforming the economy, so to speak. Generally speaking, this tracks interest rates, and interest rates are moving in the opposite direction than this ratio is, which is very weird. It's very weird. That's kind of 1970s type stuff. But generally, you see a crash in this ratio, which indicates a crash in the markets. So this ratio is pulling back, and we could see further downside in it, and we could see further weakness in the economy, is what this is telling us. We also have gold versus the CPI, Consumer Price Index, and we can see that we've got this gigantic gold outperformed the CPI during this time frame. We had a gigantic pullback in it, came all the way back up, hit another kind of creating a trend line, 3 hits on the trend line, and we've got this big kind of cup and handle. Hopefully we can break above it and work our way up there where gold outperforms the Consumer Price Index. So kind of another way to look at things. But that's what we've got for today, guys. That's what I've been looking at. That's what the ratios are saying. It looks like to me, a couple of standouts are platinum is really cheap. It's the cheapest precious metal, and it still looks good to outperform. It looks like it's starting to turn and bottom and against other metals and has positive inflection against them for the ratios. And natural gas looks like an outperformer as well. Oil is also cheap. So oil is cheap to gold. Natural gas is cheap to oil. Natural gas is basically another commodity that is very cheap. I know I don't have uranium on here, but uranium is also another one that is very cheap against other commodities. It just doesn't seem to chart UX1, the futures pricing, but it is also very cheap. And the equities of gold and silver mining companies are cheap to gold, and the equities of the uranium equities are cheap to uranium, the commodity itself. So that's what we've got, guys. That's what I'm seeing in the markets. That's what's cheap. And you know what? If you guys like the content, give me a thumb up, subscribe to the channel, subscribe to the website if you'd like, join our community. I also go over a lot of ratios. I go over a lot of individual companies where I think I'll say where I think the advantages or where I think the value is in the markets and the companies wise. So I don't really hold anything back there. And we do talk about physical metals, how to trade them, stuff like that. But we'll see you next time, guys. That's all I've got. This is Finding Value.